Now, for more on what we can expect from global markets, I spoke to Belpointe's chief strategist, David Nelson. I began by asking him what's keeping investors up at night as we head into 2016.
Well, certainly oil would be at the top of that list. Some have called oil a potential black swan. Look, we were supposed to get a big benefit from oil in 2015, and it certainly helped out the consumer, went into their pockets, but they didn't seem to spend it. It certainly wasn't showing up in the cash registers of anchors at the malls. But there's another side. There's a dark side of lower oil prices, and that's principally about 16% of the junk bond market right now is oil concerns, and we're starting to see our first wave of default. So I think that's a concern. Probably next on the list would have to be the Federal Reserve. The Fed has launched. We've been waiting for it. It's finally here. It's the end of an era. And now the Fed supports a pretty sizable balance sheet. How they unwind that is going to be a concern. But I think for next year, I think we all know that the terminal rate is going to be a low interest rate, but it's going to be the pace of those hikes over the next year. That's going to put some pressure on multiples. They've kept rates down too low for too long, and it's had unintended consequences. It changed corporate behavior. A lot of CEOs issued a lot of debt, cheap debt, and they used those funds for financial engineering to buy back a lot of stock, but they didn't reinvest in the economy, and they didn't reinvest in their company, and we're going to pay for that somewhere down the road.
Would you say that the Fed hike is the biggest threat to emerging markets?
Well, I would look at it a slightly different way, because usually when interest rates go higher, the currency goes higher as well, and as the U.S. dollar goes up, you can see it having an effect on a lot of the credit and debt from emerging market countries, because a lot of that debt is dollar denominated. So as the dollar rises, it becomes more and more difficult to service that debt. And that could spill over into other sectors of their economy. So I think the dollar rising is probably the bigger concern.
Now, shifting gears to something positive, obviously with all this uncertainty,
Sure.
Are there perhaps any standout sectors that you can see growing in 2016?
Well, growth can always come from almost anywhere, but I'll give you three that I think investors should focus on. Tech and healthcare always have a secular backdrop of growth. Having said that, healthcare will be under pressure in a presidential election cycle that's already started. Companies like Gilead with a $1,000 a pill hepatitis C drug, they're always fair game, and that will come up. And technology is always a strong area for growth. But one more area that I would look at would be defense. I think most analysts believe that defense spending is going to increase in the next administration. I can only think of one candidate running on either side of the aisle that is likely to reduce spending, and that would be Bernie Sanders. And frankly, I don't think he's going to be there when the nomination process is over.
And you did mention tech, and in 2015 we saw a lot of very high startup valuations,
Sure.
especially in the tech field. And a lot of those companies aren't around anymore. They're starting to see problems. So do you see?
Okay.
Do you think some analysts are saying that there might be a tech bubble? What do you think about that?
Well, look, there are always some stocks that could be in a bubble in any sector, and certainly technology. You could say the same. But look at the largest technology company out there, and that's Apple. Apple trades at around 11 times earnings for next year. That's well below a market multiple. Compare that to an Exxon, whose valuation is almost twice that, trades at 2 times the multiple. Which one's in the bubble? I venture to say that Apple and a lot of other tech stocks are doing just fine. They're not overvalued. There are some out there that I'd avoid, but tech is not in a bubble, at least from my standpoint.
The ECB has put these policies in place to try and stimulate the economy. So how confident are you
Sure.
about Europe?
Well, I'll temper it. Look, certainly I find it attractive. The valuations are more attractive. They're about 2 years behind the United States right now. They have a very loose, a very easy central bank policy, and the ECB is going to be very important there, because just a couple of weeks ago we saw Mario Draghi speaking on ECB policy, and his comments were thought of as less than dovish. And almost immediately you saw the euro rise, the dollar drop, and that hit their markets very hard, and it spilled over into our markets as well. I think they want to keep the euro low, and as long as they do that, that will make their exports attractive, and Europe should do well in that environment.